What's going on, everyone? All right, we're back to trading. This is another trade recap. It is for Monday, April 14th. And if you've been with me for a little while, you know I didn't trade last week. I didn't trade Wednesday, Thursday, and Friday due to some of the economic news calendar, some things that were on there, Fed speakers. So last Thursday was CPI. I'll trade CPI, but I don't trade the day before CPI because a lot of times price action could just be not so good for me. And my history tells me that the day before CPI, the day before NFP, both those days, I just sit it out. And then on CPI, we had a bunch of Fed speakers, and then Friday as well. And today, I was even looking at today. I'm like, I pulled up the calendar for the week. I was like, there's some Fed speakers today and a lot of days this week. Even though some are like early afternoon and late afternoon, sometimes, especially with what's going on with tariffs and all kinds of things going on in the world right now, that any Fed speakers can create, some unpleasant price action. So you got to be really, really good, know what you're doing. So, but this is my trade recap today. I'm not really happy with my trading today. I did take a small loss. And I didn't trade all my accounts just because all my accounts have never been in sync with request payout days because, I added when I built up my 20 PA count, it wasn't all at one time. It was 3 here, 3 there, 3, that kind of thing. So my request days have always been off. I was trying to get them together. So today I didn't trade some of my accounts. And had to get some of my other ones because I've been requesting, every week just about, and because it's been different accounts. So I've been wanting to get it on the same schedule, so I did that. So because of that, it was a small loss, but I'll show you why I wasn't really too happy with my trade. My initial trade, yes, and you heard me right, my initial trade, and then you'll see. Let's get to it. You'll see. All right, so here's the weekly chart. I want to point this out because this is where I've been talking about here. Let's make sure you can see. Over here on the left, we have all this gapping here, right? Price came down in here, displaced up through this high with these gaps here, right? So that's like I've been watching that. And I know we ran into this area. So if I mark out this one, price went right down to that weekly fair value gap right there, okay? So then if you look over here, we have this volume imbalance, which price did last week hit that volume imbalance right in there. You can see that. Actually, let me turn this little pointer off. There we go. So it went right inside there. Okay. So now it's like, okay, on the weekly chart, if I'm expecting, what do I expect on the weekly chart, right? Now that we hit that, I'm watching here. If this week we close up at Friday, at the end of Friday, we'll have a volume balance here. But on the short side, we kind of went, we have this low, we have some more stuff, but for the meantime, we're pulling up. If we do continue up, I'm looking at this swing right here. It's not letting me select it. There we go. Another volume imbalance. And then a fair value gap in here, right? So I'm kind of looking at this area. And if it takes that, well, then we have some more up here, right? Another fair value gap up there. But in the meantime, I'm waiting to see what happens in this volume balance. Does it send price lower? Or does it want to come up and take up here? Kind of waiting to see. So let's mark these two real quick so we can see that. And then I'm going to drop down to my daily chart. On the daily, let's see. On the daily, we had this from last Wednesday shot up. That was a huge, like 2,000, 3,000 point run. But what did we have here? We have this big imbalance. It's not a fair value gap. It's just an imbalance. Okay. Big imbalance, right? Here's the midpoint of it. Let's zoom really. Let's get in here. Here's the midpoint of it right down here. But look right here. This is that weekly, the midpoint of that weekly fair value gap. What do we have right there? We have relatively equal highs. Let's see. What's the high of this candle? 19,388. High of this one, 19,384.50. Buy side liquidity is going to be resting right there. All right. So again, if I'm expecting, where am I expecting price likely to head to? Well, I'm expecting it to at least run this buy side liquidity up here. Okay, and if it keeps going up, well, same thing. If we closed today, which we did, we get this daily volume imbalance right there. Okay. So now I expect price to go up. It could come down into here, but I expect it to take these highs at some point. And then what do we have here? Above, we have this swing high. And what do we also have? This fair value gap right there. Okay. So that's kind of what I was looking for. I was looking, okay, do we go long and take these highs? So if that's the case, I'm expecting, what am I always expecting? Price to go short first, right? So now let's go ahead and drop down to, or drop into, well, let's go to the 1 hour first. So I can show you what I was kind of looking at. We had this big move up, right? We had this new day opening gap from Sunday right here, Friday afternoon close to Sunday night open gap. Okay. And then we had this high up here, right up there. And then we had right here. This was kind of a swing low right here. Okay. So I was looking at, because this was 9 o'clock. This closes at 10 and goes and opens this new bar. So what I was looking at is, all right, are we going to go run and take this little bit of a sell side liquidity here, hit this opening, new week opening gap, and then push up through higher? Or are we going to close the gap and push up higher? Like, what are we going to do? Or I was waiting to see, do we run up and then run down? My bias for my trade morning was a bit neutral. Like, I had to wait to see. I had to wait and find out to see what it really wanted to do, what price it wanted to do. It was one of those days where, you know, a lot of mornings I come in, I'm like, oh, this is framing out perfect. I know exactly what I'm looking for. And then other mornings I frame it out and say, okay, I got to wait and see what market wants to do. Okay. So here was 9:30. Now we had 7:15 right here. We had these relatively equal highs right here, right? And price took it right up here. And it actually ended up taking this high right here as well. Right there. So because of that, well, and then what we had happen was we dropped at the open and we took this that I had that sell side liquidity, right? So since we took that sell side liquidity, I was like, all right, now let's see if we get a market structure shift and move up. And we had this 15-minute fair value gap form right here as well. But because my overall, I was leaning a little bit more towards a long for it to run up through that buy side liquidity on that daily chart. And this was my mistake. At some point, I made that my bias and I held on to that too tight, regardless of what was happening in the chart. Because keep in mind, just remember this 15-minute fair value gap right here. Look what price did. Look where the bodies closed, right? And then look what happened. So just remember this 15-minute fair value gap whenever we get into my other charts, my trading charts here, okay? All right. So here's my trading chart. Have everything measured out. We had a big opening range gap as well. See if I can show it right here. It was pretty big. So I was saying, all right, we may not come back trade through it. So if we do trade around this area and I get a setup for a long, I'm going to take that long. Should be good. All right. So then here we go. We opened. Now we did in hindsight. This is not my model, my trading model. But if you look how we ran up here, had this little fair value gap, made another high, and then shot down, came right back up to the middle of this fair value gap right here. There's also an inversion right there, and then just dropped. That's not my model, but just wanted to point that out. So this is what I'm looking for. Like, okay, here we go. Cool. We're heading the right direction. Here's a minor sell side liquidity I had, which was based on this low. Let me get rid of that because I didn't really need that. But then here was that sell side liquidity right here that I had marked from that 1 hour and 15-minute chart. So we ran right down to it. I was like, perfect. This is what I'm looking for. Shot down, came back up. I had this as a potential order block right here because it took this sell side liquidity. The next bar shot right up and closed above it. So I was watching this bar right there for a potential order block. So I wanted to see price stay above right here, this midpoint of it, which is right here. Here's the bar. Here's the midpoint. So I was like, okay, price is staying above it. And then we came up. We created this swing right here. We came back down, created this little fair value gap, and then immediately inverted it. So we turned this into an inversion. Took this swing. And then we had a little fair value gap right here, if you can see. Right there. I'm like, okay, we got this little fair value gap. This inversion. Hey, this is a good entry. That's good entry. So now I was looking to take it right up here to the first presented fair value gap or right here, which is where I had my target at this one. And if you measure this little dealing range right here, range. Okay, here's equilibrium of this high and this low right here. So the first imbalance or internal range liquidity after that would be right here. So that's actually where I had my target, was right here. So you'll see that. Okay. And then look what it did. It came way down here. My stop was right down here, by the way, under this inversion. It came way down, so I took some heat on it. And then this bar ran it up, came right up here, came down, and I moved my stop to break even, like 5-point profit, as soon as it came up here. Because I was like 150 ticks in the profit. So I was expecting maybe it'll come back a little bit and then just displace up. And my stop was right down here. Had I left my stop where it should have been and just what I normally do, then I would have been fine. And because you can see it came back down here and then it ran all the way up through my target. But I got out of break even. And this is why I don't like doing this, because a lot of times for my discipline in psychology, I have my money management built around my trading plan really, really well to where I can accept losses all day long because they're within my trading plan, my money management plan. I know exactly how much my targets are between 35 to 60 points minimum, and my stops are never more than about around 30 points. Now, I did have a question, so let me pause right there. I did have a question on one of my last videos. Will asked me, he wanted me to address this. He said, let's see. Asked about me discussing whether I consider sizing down or anything with this increased volatility, or if I sit out, like kind of how do I manage that, right? Well, what I do is I have my money management plan built out very specifically with how much I can risk, my dollar amount, all that, how many contracts, and typically for me, and I do have my discipline or my money management videos. If you watch them on my YouTube channel, I go into more detail, but I know based on my plan and my strategy, I shouldn't be risking more than about 30 points. All right, for my normal contract sizing. So I'm not going to just say, oh, I entered here. I'm only going to risk 30 points. So I'm just going to put if my 30 points is here, right? And I'm going long and my 30 points is here. I'm not going to just put a set 30 points because the market doesn't care where your stop is, right? We all know that. So you got to place the stop in the correct place. Okay. Like for me, my stop needs to be way down here, at least below the opening of this bar. Preferably, I would like my stop down here, even lower. But I had this inversion. I had reasons why price probably should not go, back below that point. But what you have to do is know, okay, if I need a bigger stop loss, then I have to reduce my contract sizing. So my normal contract sizing, I'm around 30, sometimes 35 points. If it's a really good trade, I'll risk that. If I have to do more than 35 points, 35, 40, 50 points, I got to reduce my contract sizing, right? So I usually will just go by half. I'll drop by half. And then if I have an even larger stop, like more than like 60 points or something, then I probably just will skip the trade. But because I'm typically not, even if, so that's the first part. Whatever my stop is, I have to have room to profit at least that amount or more. So if my stop is 50 points, I have to be able to profit at least 50 or more points. Preferably, I like to have a 2-to-1 available. So if my stop is 50, I want to be able to target 100 points. If my stop is 30, I want to be able to target, basically, I want to be able to target 60, double. But I will take a 1-to-1, but I have to have more available. So because of that, I don't really go much more than 60 points because there's not a lot of, for me, I don't hold trades 100 plus points typically. So that's just that. That's how I manage that. So anyways, I had my stop down here. Okay. And then you can see it came up. I moved my stop. I should have just left it. I normally leave it, but today I didn't see. That's what happens when sometimes if I don't trade, I want to come back with a win, right? Everybody wants to come back with a win. So then I moved because it shouldn't have came. It shouldn't have done all this, but I moved it up. It came back, ran up, and then at that point, I was like, oh, I know it's going to go. I know it's going to go up. And that's when I fell in love with the long bias. So even though I hit the first presented fair value gap, hit up here, when it came back down, came back here, came back down, this inversion still held. Then we made up, came back up here. Then we had a little, where is it? We had a fair value gap somewhere. And I went, oh, no. Where it was, and I'll show the video here in a second, was right here, this gap up. Because I was so, I just, at that point, I was so confident we were going to go up higher. And I just thought this was going to be a pullback. When we came back down into this big gap here, I went long again. But this time I did. I reduced my contract way down to 1 micro. And I put my stop down here. And then I targeted up here. And obviously it knocked me out. So I wasn't happy about that. It was still a small loss. But I'm like, what am I doing? This isn't my trading. So, yeah. So that was that. And then obviously you can see it ran all the way down. But, yep, not the best. But my accounts all did get, synchronized on the same trading. Well, 16 of them. So I'm going to request $1,000 out of 16 accounts. I could request more. I have a bunch of them that are uncapped right now, but I'm still trying to build them. So I'll do another video of me making that request, a payout request. But no, I'll just make a screenshot because I don't like posting stuff like that. Submitting payout requests and stuff. I don't know. That's just me. But anyways, all right. So let's play the video here. Okay, here's that trade. And see, here's where I was talking about. Ran down, we came up, had a market structure shift with this swing right here. Here was that gap. Here's these inversions. So I was like, oh yeah, once it hits that, I'm going in. So as you can see, it came down. I went in. Stop was below. Actually, I ended up putting it below the open here, but I had it below this inversion. And on NQ, see, I traded MNQ. On NQ, there was a little bit of a volume imbalance right there. So I was like, well, let me put it under this bar in case it taps that volume imbalance. Let me see. I got a new little tool here that I can make annotations. I could draw while things are live. So that's kind of cool. All right, so yeah, you see, I pull it down. I took some heat on it. So let's fast forward. Oh, I bring my see, I didn't trade all my accounts here. Put my target right up here under this 1 minute fair value gap here, like I mentioned. Then it starts coming up. And you'll see right here, it's looking good. Took this swing up here. So I'm like, all right, it should not come back down. I was really looking to get this fair value gap right here. That's what I really should have waited for. I should have left my target, my stop underneath here, and until I see us get this fair value gap or not. If we never get this fair value gap, then just leave it there. As you can see, it knocked me out. I was in a little bit of profit, and my mistake is I should have just stopped right there. Should have just stopped, but I didn't because I'm like, it's gotta go. And I fell in love with the bias, and actually I forgot to cancel this order. I did later. There we go. Close that order. And then let's see. Here we go. It's coming up. I'm like, okay, now we're definitely going to go. It's probably going to run away without me, but if it does come back in here, I'm going to go long. You see, I did wait a little bit. There we go. I went long right in here. And you can see I'm in 1 micro, which means here I'm in with like 2 micros, 1 to 2 micros per account. So it was small, but I had a big stop. So I had my stop under there and I was targeting all the way up there because I just, like I said, I don't know. It wasn't good. And here we go. We just ran down. It took its time a little bit. And then it gave me a little hope for a second. So, okay, maybe it will go. And then, nope. Right there. It took me out. And that was it. So, not very happy with it, but all good. I mean, it happens, right? We're human. That's why we have the money management. It was a small loss. Not worried about it, but all good. So anyways, that's my recap coming back. And yeah, we'll see what the rest of the week has for us. But be very careful. Be very careful. Lots of Fed speakers. Anything can happen. Price action could be pretty wonky. So, all right. Until next time, I'll see y'all soon. As always, trade well, everybody. Take care.